Welcome to the Traders Show. This episode is brought to you by Pepperstone.
Hello traders, welcome back to another episode of the Traders Show. In this episode, we're going to be talking about people who have influenced us, and we're going to focus on one man specifically. So when we started trading, we have come across different materials in the form of books, articles, podcasts, and different things have had different influences in how we look at markets, how we look at how to build a business, and how we look at life in general. One man who appears on that list and is common among the three of us is a man called Ray Dalio. So Ray Dalio has authored the book Principles, started Bridgewater some time back. Bridgewater is basically a hedge fund that is focused on trading macro markets. So they look at different markets, different asset classes, and they go long and short. So we're going to talk about the different things he's done. We're going to give you a brief summary. We believe there are a lot of gems in this 600-700 page book, and many of you may not get a chance to read the book, or even if you read the book, maybe you didn't view things in the same way we viewed things. So what you're basically going to do today is you're going to have a solid discussion on what this man has been able to accomplish and what we can learn from him, because at least one of his principles is the general life arc, and the general life arc is life can be divided into three phases. The first phase, you're dependent on people. You're young, basically, you're going to school, you're dependent on your parents to shape you. The second phase is where basically most of us are currently, where you're transitioning from depending on someone and you're now becoming an adult. So you're learning to depend on yourself. You're starting a career, maybe you'll start a family, and people will slowly now transition to depending on you. So that's the second phase of life the second phase, where even your parents can turn to rely on you.
Say the first phase is you are depending on people.
Yeah, the second phase is now you're transitioning to an adult and people will come and depend on you as you transition to an adult. And the third phase is now where you have gone through the second phase. The third phase is where now you're basically passing along what you've learned in your life journey if you've been successful. And so he's in the third phase. He's doing a very, very amazing job. That's what I'd say, of passing along what he's learned and what is valuable for young people who are interested in pursuing markets, pursuing business, pursuing life in a different light. And I personally think I've learned a lot from him. So today we're going to talk about his story. I'll give my colleagues a chance to introduce themselves, tell you guys how their week has been. And then we'll just directly jump into the topics, the different things that this man has been able to accomplish. We can divide the podcast into three main sections. I think the first section will be before he started Bridgewater, how he learned about markets. The second section would be how he started Bridgewater and what he has learned building the company and how the company is structured. And the third section can be alongside Bridgewater and what he has done. I think we can talk about his philosophies on how markets work, how he views markets, what he thinks is important if you're going to be a trader and an investor for the long term. And then the third phase is we can pass along some of the principles which have generally impacted us and how we look at things. So I think that's how the podcast will be structured. But before we start, let me allow my colleagues to introduce themselves.
Hey, what's up, guys? So welcome to the podcast today. As Kenna said, we'll talk about Ray Dalio, Raymond Dalio, better known, but he's known as Ray Dalio. And Ray Dalio has really influenced us. For those who do not know him, he has the biggest hedge fund in the world, known as Bridgewater Associates. Where is it? America, where? Connecticut. And if you know, most hedge funds are normally maybe in the heart, New York sides and all.
Wall Street.
Yeah, Wall Street. But he decided to take his all the way to Connecticut. And we'll talk about him. We'll talk about how he came to do all those decisions, how he trades, how he thinks, his principles, because we're basically talking about his book that Ken has introduced. It's a very thick book, but it's very, very informative. And if you're in this world out here, for us, we've relied mainly on books to know how things work, how markets work, how trading works. We've never really gone through the traditional way of going to school, the economist way. And normally Ray Dalio also talks about the same, how he is really a practitioner, not really an economist. And that's a big difference. Economists know different things, but they don't know what to do when it's time to execute. But Ray Dalio really emphasizes that he's a practitioner and how he approaches the market. Okay, so we'll talk about him. It's very interesting, very good story. We'll give some recommendations, some books, some videos maybe that you can watch. But apart from that, we love his works. We've been following him ever since we started trading. We've watched him in our about 6 years now into trading. We've watched him. He removed this book while you started trading, yeah?
Around 2017.
Yeah.
Yeah, we had already started trading.
Yeah.
And then later on, he came and before that, he had removed the debt crisis.
After.
That was after.
Yeah,
This
this
was
was the first
one.
They
book.
started this one.
And then the big debt crisis.
Yeah.
And Changing World Order,
Then the changing world order.
which
Yeah.
came out, was it this year or last year?
This
Last
year. Changing world order.
Yeah.
It's a really recent one.
This year.
Yeah.
Whatever the time
Probably,
is.
yeah.
But it's very recent. It's less than 1 year old. So anyway, so we'll talk about Ray Dalio. Apart from that, my week has been fine. We're also watching the market, still doing our challenges, and they're going quite fine. So we'll keep an update on that. But today, let's focus on Ray Dalio and what he's left for us behind. As Ken said, he's going into his third phase and he's giving back to people. So that's it from me. Let Taras introduce.
Greetings, people. Thank you so much for joining us in this episode also. So today, as my colleagues have said, we're going to talk about this great man, Ray Dalio. I don't think I should echo much about what you've said. You've introduced him well. So for me personally, I really, really like the works of Ray Dalio because he has helped me shape two parts of my life, both trading and business. So at Financial Hub, basically we do both. We're in business and we're also traders. So trading is a business. Then we also have another business whereby we now try to teach people about trading. So he's really, really shaped much about how I look at business, the challenges you face when doing business, how to come out of challenges when you are facing them, basically the plan you can use to come out of challenges, failing well, so much. So this guy has really, really shaped much of how I look into business and also trading. So those two aspects are really, really important. I think my life mostly revolves around those two things, business and trading. So I think he's is one of the people who have shaped much of how I look into business and also how I look into my trading. So the story will be much about him, his how he started trading, his failures, his successes, what we've learned from him, his books. He's authored about 3 books now, I think. As Caleb has said, the Big Debt Crisis, Principles, and now the Changing World Order. So 3 very, very important books. You guys should also maybe get what is in the books, maybe purchase the book, or you can find it online maybe, because he also, I think, gives the ebook for free. He also gives all his ebooks are for free, so you can access them. So Principles is for free ebook.
Yeah.
Changing World Order is for free ebook. As long just the physical book is the one which is being sold. Yeah. So you can access his materials. He's a very, very great man. He has a lot of documentaries on him. So I think we will pass along what we've learned from him, and how we are putting it into practice. Much of his failures also, because he started trading back in the days 70s. So he's a seasoned trader. Been in the markets when the markets were up, down. I mean, he's faced all the most of the, not all, but most of the market cycles. So he's been in a boom market, he's been in a bust market, and I think he's made money. He lost money, I think, in the first boom market. Then he made money, a lot of money in the bust. So we'll also talk about how he made money, his principles. Basically, he's just a great man, and I think that is what we will dive deep into the podcast. So ensure you watch this through the end so that you can learn much. It will basically be a summary. So we'll summarize what we know about Ray Dalio and Bridgewater's, the hedge fund. So we'll basically just give a brief summary of this man, Ray Dalio, and the company he's running. So I think we can start from. Yeah, I think that is all I had. My name's Taras Lawi. Sorry for that. And for this week, in terms of markets, I really didn't have an active week. So I had anticipated about 2 trades at the beginning of the week, but they both slipped away from me. So I didn't get a chance to catch them well. So this week I was a bit flat on the markets. So just watching markets, an interesting week. Also, we saw the Feds raised rates by 75 basis points. So that was also a very, very impactful event for this week. So that also they released GDP on Thursday, I think. So they also released GDP on Thursday. GDP for the States is not growing so fast, but also it's a bit flat. I think it grew by about 1% or something. So it was a very flat GDP growth rate. So markets, we are now looking at markets in a recession, markets not in a recession. That is the main debate about the main debate on Wall Street and in Washington. So guys are looking at, are we in a recession? And those are for traders, and also for the central bankers. They're looking at the inflation numbers, still are very, very high, about 9.1%. So they're really struggling to bring that number down. That is why they're raising hikes. They're hiking rates very, very fast at 7. I think now it's about 2.25%.
2.25 and
to 2.5%. Yeah. So we are at a now a high interest rate environment. So that is the major thing shaping markets. But personally, for me, I've seen an awkward move. So I was expecting stocks to move down, but I'm still expecting them to move down probably next week. But for this week, I think the GDP numbers helped stocks stabilize. So stocks were able to at least move up. I think most of the stocks this week have done really, really well. Nasdaq, Dow Jones, I think overall for the week, they're up more than 2% for each of them.
yeah.
So stocks have been stable amid raising interest rates. So it's not a really, really common thing to see. But let's look into next week and the next coming weeks, probably to see if the trend will change and if we will get that down move in the stocks. In commodities, we've also seen gold moving up. I think trading at about 1766 at the moment. So also gold is moving higher, but let's look at the trajectory moving to the next week, moving into a new month also. So next week will be a new month, August. So we're moving into August also. So let's look at how the markets will move probably for the next month. We are still bearish long term on those assets. We are bullish still on the dollar. So that is just on the market outlook for the week. I didn't have any trade this week, so I was flat. But yeah, let's get into the man Ray Dalio.
Pepperstone gives you access into the global markets with more trading opportunities, first-class customer service, and peace of mind. Withdrawals are quick, and for those in Kenya, M-Pesa is enabled. Pepperstone Markets Kenya is regulated by the Capital Markets Authority. To open an account with Pepperstone and begin your trading, click the link on the description below.
Can you start?
I think Caleb is in a better position to start since he's the storyteller.
Storyteller.
Yeah, so among the three of us, Caleb is the one who's very, very good at passing along things in the form of stories. And he has gone through this book. The first section of this book is divided basically into how Bridgewater was built. So I think what I can do is I can explain to you a little bit about Bridgewater, then Caleb can come in and explain to you how it was built. So Bridgewater is a company that was started in 1975 in a 2-bedroom apartment. So when we started ours also, we used to joke we're doing the same thing he did, because he started in a 2-bedroom apartment the same way. He started it with a few of his colleagues, and he grew the company very, very well from 1975. He started, by the way, by sharing his research on the market. So he was not basically managing money in a 2-bedroom apartment. No, what he was doing was he was trading his own personal funds, but he would share with people his perspective on what markets were doing or what the economy was doing and what it meant moving forward. So for example, he'd say maybe we're in a period of high interest rates and we also have high inflation, so that most likely we are going into a period of stagflation. And in a period of stagflation, this is what I think different assets will be doing. This is how I think a portfolio should be structured. So he started by sharing his observations like that. He used to call them daily observations of the market, and he'd send them out. And after doing this for quite some time, the World Bank approached him with $5 million as starting capital for him to start trading. And he took the account and started managing the account very, very well. So he started the money management side of it with $5 million from the World Bank. I think the World Bank was the first client he had, at least from the story we've read. And so from that time, he started just trading well, and he would make money. Then came to a period in 1982 where he went bust. So by going bust, I mean he lost everything. He lost every single penny that he had. So he had a view again of markets that the American government had lent out so much money to the Mexican government and other emerging countries. And so he thought that these countries will not be able to foot the bills. And he expected that since that would happen, the American economy would tank and we would go into a recession and stocks will sell off. And these things, he shared them, and it was a very controversial view at the time. People expected him to be wrong, and he was right. So things started getting right, but he was wrong on one thing. He was right on what the economy would do, but he was very, very wrong on what the stock market would do. Why? Because he expected when the economy would go to a recession, stocks would sell off. Instead, when the economy started going to a recession, the governments came in with a lot of money and devaluing of the dollar, and that resulted in a very, very strong stock market. So from 1982, we had a very, very strong bull market, and he lost everything because he was tied to his ego. He didn't cut his positions, and that is when he learned the value of dealing with what you don't know. So the first line of this book is, whatever success I've had has come from me learning how to deal with what I don't know rather than what I know. So he says that for him, that was the most painful, but it shaped his career in a very different way. And from that time, he's approached things in a very, very different way. And I think that was one of the moments where his principles came to light, and he formed a very, very different view of how the world works and what needs to be done for you to succeed, especially as an investor whose sole job is to bet against what the majority of the people think is right. So Bridgewater now has been in existence since then, so 1975 all the way to 2020. They have different funds. So they have the Pure Alpha Fund, they have the All Weather Fund. He's a great believer in diversification as this holy grail to investing. So he believes you should diversify across assets, across countries, and across strategies, maybe even. That's what one thing I've personally observed from how he looks at markets. He's a big believer in looking at historically what the market has done and trying as much as possible to learn from historical experiences. According to the man, there are no new things under the sun. Everything that we're looking at has happened before, only that it didn't happen in our lifetime, so we may think of it as new. But really, if you just pay attention, if you go back historically and try to examine, then you'll find that some of these things have happened. His second book, which is The Changing World Order, is basically a compilation of 500 years of research.
Second or third?
Third. Big
Is
Debt
that
is the
book?
second.
Okay, yeah, he's that book. Yeah, because he has the big debt crisis. So his third book, which is The Changing World Order, is basically a compilation of 500 years of research into how different empires, dynasties, and markets generally worked. And he's come up with very, very good observations and indicators. And I think generally, if you try to examine how he trades, and I think how he trades is well explained, not in this book, but in the book Hedge Fund Market Wizards, which is an interview that was done by Jack Swagger on him, on how he looks at markets, because that one focuses basically on how he looks at markets. One thing you'll observe is he focuses on a few economic indicators, and he has tested them with algorithms to see how different asset classes perform under different economic environments and how to structure a portfolio under different economic environments. So what basically that means is when rates go to a certain point, inflation goes to a certain point, GDP goes to a certain point, geopolitics are at a certain point, then there's a way they'll restructure their portfolio to fit certain risks. When things change, they'll restructure it again. When things change, they'll restructure it again. At least that's what I really, really understood. And he talks about 4 things that are really, really important: how the economy is doing and how inflation is doing. So if the economy is growing or is the economy slowing down, is inflation increasing or is inflation coming down? Those are the 4 main things that you'd get. But if you want more of that stuff to digest it, internalize it, you can look into that section of the Hedge Fund Market Wizards book. There's a chapter on him. You can go through it. But for now, Caleb can take us through the story of how Ray Dalio became who he is.
Ray Dalio became Ray Dalio.
Yep.
So, I won't go that deep because I'll just say what's above the water, because I don't... I've been reading, but the last time I read the book was some time back. But I remember the story. I like stories, as Kenna said. So such things intrigue me. Then I can go, like if someone comes to me, tells me the story of this person, then now I'll be more interested to now go deep into his works.
Yeah.
And that's the same way I got interested in Ray Dalio. If I just got this book at first and started reading it, I don't think I'd be that interested. But once I got sort of like a teaser, like
I remember I told him about Shoe Dog Phil Knight, and
Yeah.
he bought the book the following week. I'd not bought the book, I just read the story online, and then he bought the book, so that's true.
So that's what gets me. The same things, Steve Jobs, Phil Knight, who else? We've read a couple of people, Bill Gates, all these people. And
Elon Musk.
Yeah. We read his book by Ashley Vance. And I keep telling people in especially at the office, my colleagues, Mitch, Nico, Kinairin, I keep telling them and the others that if you want to take this and also my students, that if you want to take this career, man, you have to read. And we keep laughing with Ken and Tara saying, we don't understand how people don't read. Like, once you start reading, like, you can't stop.
It is dealing with the what you don't know.
It's a very good explanation. I was thinking about it. I think I should even share this with you. Just to interrupt you, Kidogo, before you start. I was thinking about how I was just listening to someone again talk about the same thing you're saying, like reading, and like you can imagine your life if you didn't meet this book, or your life if you didn't read Steve Jobs, or your life.
Or the first book the currency market.
Yeah,
what was it?
Mastering the currency
market.
Exactly.
That's the first book we read about trading.
About trading.
Yeah.
Took it from the library in
Yeah.
the EU.
Exactly. Now you can imagine if you never met such books. A whole new world was opened because you flipped through a 300-page book or a 200-page book, and you spend about 2-3 hours maybe doing it. Okay. Now, there's so many books written outside. Like there are over 1 million books written, at least from statistics published.
Yeah, even more than 1 million.
Exactly. I'll say that there are over 1 million
like
books.
10 million.
Books.
More than
Exactly.
a lot.
Now, I can assure you that out of those 10 million books, the ones that have true gems which can really, really also impact your life, change your mind, are not that many.
Yep.
Majority of them are talking about the same stories written in different languages.
Some are fictional.
Some are fictional. Exactly. So, one thing you should also be very careful about is, first of all, how much time you spend reading, and the second thing is, what are you reading? Okay.
Exactly.
And the last one, my lad, what are you thinking about of what you're reading?
Exactly.
Remember that principle that my dad wrote? You remember the things in the book?
Yeah.
Remember?
Yeah.
Like, you might be reading this book, but what you're thinking,
It's very
the
different.
questions you have is very, it
Exactly.
don't help. Yeah.
Precisely. Now, based on that, I tried to think about how many books I can cover in my lifetime. And I decided to be very, very optimistic. And I said, assuming I'm reading 5 books every month, which translates to about 60 books.
Which is a lot.
That's a lot.
5 books every month.
Every month. That's
That
a
is
lot.
if reading is your career.
No, but you
You
can.
can.
You can. If you're reading 3 hours a day, and you're reading
Depending
even
on how
during the
fast you're a
weekends,
reader.
you can read 5 books a week, a month.
A month?
Yeah, you can.
For me, okay.
Maybe I can't.
Practically, from what I've been doing, I can't.
Yeah, you can.
Because I think
can.
for me, I read a lot of books, but I don't do them to completion. Like I
That's
read
also
interesting
something-
parts that
that's also
what I
something
want to
you
get from
should
the
do.
book. Exactly.
That's also something you should do. You shouldn't even spend so much time with a book if you're going through something that's not mind intriguing or mind boggling. You should just skim through it. So there are
Okay,
those
yeah,
books
yeah.
also which you'll skim through.
Yeah.
But if you're reading, let's say 5 books, so I'm being optimistic again, like you've said, 5 books, still you have to be an avid reader. You have to put reading as your priority. You have to spend time doing it, okay? But if you read 5 books a month, that means you're reading 60 books a year, okay? If you live for 60 years,
So you're starting with what year?
I'm
for your
assuming
age?
you're starting from now,
25.
25.
So you live till
85.
that's what it is.
Kila shajipea lifetime here.
60 years.
Yeah, 60 years from
60.
now.
60 years.
Yeah, 60.
6,600 books.
Exactly. So even if I'm being optimistic, the maximum number of books you can read, at least from where we are, is 4,000. That one you should be very careful, those 4,000 books.
So what if you 10 million?
Hautaifika.
You can't.
Dangana. So even as you download these books,
Yeah.
be very careful what you read. And so one of the things that I've personally decided is to first focus on classics, like the books which have been tested over time. These were great books and have been recommended by generations and generations. So you should try to spend much of your time there. You should try to spend much of your time where you have questions, like I've said. But you shouldn't just read for the sake of reading. You just go to the bookshop and you just buy any book.
Exactly.
If you're being thoughtful and you really understand what you're trying to accomplish, and you really understand, again, the time you have. And again, another thing that I also decided is, for me, I'll really prioritize reading. Like, number one, if I have, let's say, if I'm told, listen, you're going to make more money doing this, but you're not going to have time for reading, I don't want more money. So I'll spend more time reading. I've decided solely to focus on doing certain things because I know the value of doing certain things in the long run. But anyway, that was just something to say on top of what you were saying.
So as Ken is just saying, my point was, you have to read and read vastly. We don't just read trading books. We read we read widely. Like I have
Philosophy, business.
exactly,
A lot.
and even Seneca, from the letters of a Stoic. He says, letters from a Stoic. He says about books, you should rather have
A few authors.
few authors and go deep into them
Yep,
than
yep.
have many or just all over the place. And yeah, it just is like it's like eating food. You can't take all the foods
At once.
at once. You have
Yep.
to some specific ones, and you stick by those
Yeah,
consistently.
consistency, yeah.
So,
Let them be digested.
yes, because now you'll come and see we've read the works of Robert Greene. I'll come to Ray Dalio. Robert Greene, you go deep into them. So there's Mastery, Art of
Seduction.
48 Laws of Power. Which else?
33 Strategies of War.
3 Strategies of War, Laws of Human Nature. So
There's
there are
this
couple-
new one. What is the new one?
Daily Laws.
Daily Laws, yeah.
Yeah.
One called the Daily Laws.
Yeah. So when you get someone like Robert Greene, go deep into him. You get someone like Ray Dalio, like Ken is saying now, he has 3 books now. This is on economy and how the world works from an
Lives.
economics, business principles. You go deep into that. Go to the side of philosophy. You get a few philosophers. Go deep into them. Go to biographies. Of course, biographies you'll find mostly it's just one because it's a whole story compiled. But it's also interesting. So you have to know that. Then another thing also like telling people about reading books. You really have to have questions about where you are in life. Like I see many people struggle reading books because they'll take a book. Like now someone will come and take this book and say, let me read Ray Dalio because Ken was talking about it. Not even halfway. Somewhere to page 10. This book is boring. You know, like me, if you bring me a book on right now, like
Biology.
Biology or motivational books. When we started reading, I really wanted those motivational biographies,
But now you're
inspiring books.
beyond it.
And now those are the same things like you're saying. I'll just skim through, okay, see a few things that this girl was saying, maybe it's a bit different, put it in a different way, maybe kept a different story which I'd also like to share, like that. But I won't, motivational. I don't need motivation now. I have it. Now I need understanding.
You're
of how to
motivated
build-
enough.
I'm motivated enough, and I need an understanding of I'm already in this business now. How can I make it
Grow
work?
it, yeah.
Okay. So now, while you are doing that, you stumble upon Ray Dalio. He's in the world of economics, trading, finance, business. As Ken said, life principles. He's encompassed all this, and as Ken was saying, he started his year trading. I don't remember which year, but it was in the 60s. And I remember he started quite aggressively, like Ken was saying, he was writing articles.
No, you should take them back to all the way when he was
Carding.
12. Carding, bana. In the alikuwa na kadi ya John F. Kennedy.
Exactly.
Okay, yeah, that's true. That's what I was saying.
As a young boy.
Yeah, we can change.
Because this guy started trading at 12.
Yeah,
Yeah,
it's 12.
Yeah.
Ray Dalio.
Yeah, at 12.
Yeah, true.
Started at
Because he was carding, and for those people who don't know what carding is the golfers.
Yeah, so carrying those bags for those people, those rich men who are playing golf, you
Exactly.
carry for them those bags. Eh?
Yeah, so he's carrying, he's following them and just listening from afar. These guys are talking about financing. The way to become wealthy and become rich is through investing.
You're talking about the stock market.
Stock market, yeah.
Yeah,
How it
stock
was
market.
hot.
Yeah.
That time people were making money from stocks.
Crazy.
And that golf club was a private club. So only the rich used to come there. As Ken is saying, John F. Kennedy.
And most golf clubs are
Exactly.
like that.
Yeah.
And the rich, of course, you'll find many investors. One way to become rich is
Guys are from Wall Street.
Through the stock market.
through the stock market. Everyone who's a billionaire is in the stock market.
Yeah, true. Everyone.
Everyone,
Because everyone who is a billionaire owns stocks.
Exactly. That's
You
the
can't
way
be a
they
billionaire
became-
if you don't own stocks.
Yeah.
How?
Yeah.
Imagine. You take that point seriously. The only way you become a billionaire is to own stocks.
There's no other.
You
Yeah,
can't
true.
own land. Can you own the whole world? You get because
Yeah.
But anyway, yeah. So he was carding and listening to these people and talking about finance. Then how did he trade? How did he take his first trade?
He saved about $300, I think, from
from
carding
carding.
money. Yeah.
How old was he that time?
Around
Oh,
12.
that 12
11,
years. Yeah. Around 11, 12. So
Yeah.
I think I don't really know how maybe he even opened an account.
He opened an account through his dad.
Through his
Then
dad, yeah.
He bought his first stock, which was Northeast
Airlines.
Yes.
which was trading below $5. And the only reason he bought that stock was because it
He
was
could
the only
afford
one
it.
he could afford.
Yeah.
So he just
He had no
bought
option,
it.
he just bought it.
Exactly.
He just bought it. It was a very dumb
And
strategy.
lo and behold.
He tripled his money though. Luckily, it was the company was going bankrupt, but it was acquired now.
So it was
by
$300.
Yeah,
And the
$300.
amount you guys started trading was how much?
$300.
Hey,
And you similarities. Yeah, and he also tripled it. And we lost it. And he also lost it.
Because you followed many of what is done, but continue.
Anyway,
I'll show more
so-
similarities.
so he lost. Yeah, no, he tripled
made,
his
he
money.
tripled
Yeah,
from the
he
trade.
tripled his money now from the trade, and he got hooked now from that time. So he said, if I've put my money here, and after this short time I've tripled it, then this game is easy. I can become very rich.
And that time is 12 years old.
Yeah, he's still in school.
He's still in school. So from that time, he
Tell
was
us
just
that
hooked
story.
to the stock market, and he was just looking at it.
Yeah. And then like you said, he tripled his money. Then he came later and lost it.
Yeah.
So, like even before he lost it in 1982, I think
he was trading to.
he was trading. Okay, yes, he's in high school, still trading in high school, but high school was boring
For him.
very boring.
He says, and we'll accept this. We'll put it in. And may I will also quote it because it's
I hated school.
I hated school. I hated
I really did. Yeah, because like what he was learning in school and
Was
what
not-
he's doing huku kwa financial markets,
As pelekani hivi.
they're not aligning at all. So school kuna biology, but this guy is in numbers, looking at prices of asset prices.
Yep.
So high school was a very boring time for this man. Then he went to campus. At least he chose what he wanted. So he chose economics.
Yeah.
So from there, at least school now
Which
became.
campus?
I think he
He
went
went
to
first of
before
all
Harvard. He
to-
went to another college.
Another
He didn't
college.
get grades. He didn't get grades.
He entered there by probation. He was just probation, so he came in. But now in college, he liked it because
Yeah.
he was learning now things which were interesting to him. So he
Yeah.
got good grades, and then he went now to Harvard Business School.
Yeah.
Okay.
So he cleared Harvard Business School. Then he started a job at a company called Dominic
Dominic, something.
Dominic something.
Yeah.
Yeah.
It was the only company which was doing commodities at that time.
Yeah, yeah,
Commodities were not hot, and he
Yeah.
knew how to do commodities
Yeah.
very well.
Because I know he actually first he was an advisor to farmers. He was advising farmers
Yeah, and he
on
was
how to
good.
hedge their harvest. I think through futures.
Exactly.
Yeah, yeah.
So,
So-
you tell them price ya wheat inaenda kupanda nani.
Because what he will do, he would look at things like, so he'll compile data. Trading is all about data.
Yep.
Compile data, many things together. And I think that's how he started his base principle of how he invests. He's looking at weather.
Yeah,
He's looking at production of things. So he's forecasting, okay, if weather somewhere maybe is bad, maybe there'll be drought, then the produce will be a little. So
Exactly.
it's going to, there's high demand, less of it, it's going to go up in price.
And
so sort of,
Sorry, I think I also do the same thing to my parents because I'm a family from farmers, so we do farm. And for me, I tend to advise my parents on when to sell their produce. So when you sell your produce, okay, most harvests in terms of maize happens around November, December. When you sell it that time, the price is very, very low
And
because
the
everyone is
supply
selling.
iko.
Exactly. So at that time, you will find maybe a bag of maize goes to about 2,500 shillings. But me, I tell them, hold, wait for 6 months, sell it in June at 5,000, almost double the price. You see,
No one has maize at that time.
no one has maize at that time. You see, there's no one harvesting, so no one has maize. So you're the only one selling. No, exactly. So you get a very, very good price.
return.
So that was, I think, what he was doing, trying to tell these people, okay, I think in the next 6 months, the price of maize will be
Better.
corn will be, wheat will be there. So our farmers wanamlipa kujua when they will sell their produce. You see, exactly. So he was more into commodities. So he wanted to get into a commodity farm, and I think that farm was what exactly what was doing commodities.
and
yeah.
here's where you also started writing now articles.
No. At Dominic, he stayed there for some time. Then he was
Just,
fired. Si hapo ndo alipigana.
Yeah,
Piga
he
boss.
Piga boss coffee.
Piga boss.
What was he doing?
They just went out drinking,
Yeah.
and then I think they had a scuffle. And he hit the boss. But he was not fired by them immediately. But over time now, he was released. So when he was released, that's when he decided, let me just start my own thing and start sharing these ideas that I have on where different things will be going.
Yeah.
I remember he said, I never want to wear a tie and commute for anyone.
Again.
Exactly.
And that's when I started writing
Those daily observations.
daily observation, what he thinks about the economy,
Markets, yeah.
the markets globally.
Yeah.
And if I continue the similarities, that's the same way as we started our company.
Okay.
Because we've said we started with the same amount. Taras is doing the same thing he did on investing, giving advice.
Guys.
It's a good revelation. Then the next thing now we moved into like what we're saying, he started writing articles.
Yeah.
And just giving advice or just his insights of where he thinks the market was going to go.
Yeah.
And those times he was quite knowledgeable and his predictions were almost quite accurate. And back to us now, the similarity. We also started the same with our company. We started with our website because we know people didn't know us. So even before we started teaching, we decided, okay, let's start first by giving articles, just giving our sentiment, our insights about the market, philosophy, psychology, the markets as a whole, new stuff, what is FOREX, all that. So yeah, so a bit of similarity there. So just comparing the two. So that's where Ray Dalio started, and then I think from there, I'm trying to piece together also the story. Yeah, it's long since I read it. You continue. What happened from there? From starting
Bridgewater,
writing articles and starting. Now he started investing as well.
Yeah, so World Bank approached him with $5 million, and they told him, based on the observations you've been writing and how you've been researching these markets.
You guys imagine, you just writing observations, then people come to you with $5 million, and that's in the 60s.
Yeah, that was a long time
That's
ago.
a lot of money. Yeah.
So with $5 million, and they told him, listen, manage for us this account. It was basically an account he was given to manage. So he started now structuring the portfolios for them. He tell them, okay, now we need to rotate from this to this. Now the risk is high here, so we need to change it from here to here. This is basically what we do for a living. That is primarily what we train people to do, or basically what we do for a living, which is basically to examine where different asset classes are and to try and think about where these asset classes are going for the next maybe week, 2 weeks, month, 6 months, depending on your horizon. And then you structure yourself in a way, or you position yourself in a way to benefit from those moves. So that was basically what he was doing. He did it for quite some time. So he built it. Now it started growing big. Until he got to that point now where he'd be consulted. He'd even share. His observations now started getting read by people all over Wall Street.
Traders, economists.
And he's a very controversial man.
Exactly.
I think that is the reason why he still is. Yeah.
He still is controversial. Yeah. So he will share his opinions. And then he slowly but surely started gathering up momentum, capital, and he started now growing. But then the big collapse came in 1982.
Just about after 6 years of trading.
Yeah,
about 6-7 years of trading.
Exactly. So now he lost everything. Like Larry said.
And before
he lost everything.
And
we had to go back to our parents.
Before you said the part for he lost everything, it's also important to mention that those days he used to be very
arrogant.
Arrogant
is the word. Don't tame it any other.
Yeah,
arrogant.
true.
With success, listen, there's also a very fine line, I think, personally, from my own understanding of things. There's a very fine line between confidence, arrogance, and being strongly opinionated. Okay? It's very, very important to be confident and to be strongly opinionated, but not to be arrogant. Okay? Because again, if you don't have strong opinions, then it's very hard, Caleb, for you, for example, to drop out of school and decide to pursue what you pursued if you didn't have strong opinions, right? But now there's arrogance. There's yes, you have your strong opinion on this is not right, this is what is right, but then there's being open-minded enough to listen to other people's opinions and other people's ideas on why things are like the way they are, or why you should
being open-minded.
Exactly, being open-minded. Now, attaining that balance is not easy. And one of the principles he came up with is be assertive and open-minded at the same time.
And that he learned from his mistake.
Exactly.
Because he was predicting the markets were going to, was it go up?
A recession, down.
Yeah.
He bet, actually, that was also one thing he did. He bet everything.
His opinion.
And went in front, there's a video, we'll put it also here.
Public.
There's a video that he says,
I know how
I
markets work.
in front of people, very sure, and he kept all his money
Markets
in
will
that.
go down.
Lo and behold, the opposite happened. The market really rallied for a very long time.
Long time. Yeah.
That was the beginning of the bull market.
Exactly.
in
Beginning.
fact. That was the beginning. Yeah? That
Yeah.
was when it started.
It's like selling the COVID momentum.
Uze hapo 18k alafu that was the beginning
Of the bull market.
of
A
you
great bull-
bleeding now for the next 2 years. But
Exactly.
anyway, yeah, so like you're saying, he lost money now. And then, like Larry was saying, he had to think of whether he'll wear a suit and tie and then work for other people again.
Other people, yeah.
So he was thinking, should I get a job? Can I do this
He first
again?
went and borrowed money from his dad.
He had to
Yeah,
borrow
he had
money
to
from
borrow
his
money.
dad.
And what
To
really
keep his
pained him
family.
is he had to fire everyone.
Yeah.
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 that's
Bridgewater's, I think,
Bridgewater
from
remained
8
back to
employees
one.
went to 1.
Yeah, he was alone. He was
back
the only
to-
one. And he's not an
So these are
employee,
good
he's the
stories
founder.
we also learn from these people, such that you're having a good ride, then all of a sudden back you're alone, you decide not to give up, you're still pushing, you have
And
to
then
get
you
down
come
with the
back.
dream and the vision, then you make a comeback.
Similar thing happened to guys like Steve Jobs, by the way.
Yeah,
If you
true.
look into their stories.
Phil Knight.
Phil Knight. These guys were pushed to the corner. Before go great CIC, unapushiwa ile.
And it's good to know these stories because they'll help you. You'll come to know you're not the only one who's gone through this. So,
But anyway, so he decided he has to start all over again, but now he has to approach things in a different way. And that is now when this man became the one who he is. Ray Dalio became Ray Dalio. I think
He really
from that
changed.
time. He changed a lot.
He really changed.
changed
His approach on risk changed.
his approach,
His approach on
risk,
markets.
knowing, humility. He moved
Exactly.
from being extremely arrogant to being extremely humble.
extremely.
Extremely. So not.
And I think
not-
he's still that person. He's still very humble man.
Exactly. He
Very
has
humble
never
man.
changed. I
Yeah.
think that experience ilim changed kabisa. So just going into a brief, let's explain a bit. Lawi, I think you can do that. You can explain a bit about how, first of all, the Bridgewater culture is like. If you're going to work into Bridgewater, what can you expect in that culture?
Okay, so this book basically is a summary of his years, from how he started failing, learning from failures, and there's that thing he calls the five step process. Yeah,
Yeah,
exactly. So for him, it's basically in life the only way to progress is through reflecting on your
Mistakes.
failures. Exactly.
Failures, yeah.
So reflect on your failures and your mistakes, then you can progress from that. So there's no progress without failure.
Yeah.
That is how he thinks, and that is what he tries first of all to pass through his employees. In that, failing is not a bad thing. You can fail well, and I
That
think
is
he
a
puts
principle.
it. Yeah, a principle. Fail well.
Struggle.
Well, you see, exactly. When you fail well, what does failing well mean? Failing well basically means you're open to failing, you are accepting it, and you want to learn from it.
Exactly.
And that is what in human nature we do the opposite.
We are so attached.
Human nature has not taught us to fail. Life as a general has not taught us to fail.
The system.
The system has not taught us to fail. And now this guy comes and says, "Fail well." You see, and it's an oxymoron.
It's changing your mindset.
Exactly. So, and it's a very difficult thing. So, first of all, at Bridgewater, I think that is one of the main principles at Bridgewater's. So, look at your failures positively. So, okay, yes, you fail. Yes, you have a bad trade. You have a bad week. You have a bad month. Take it positively. You see, a lot of traders, they don't like facing their failures.
Not traders only.
Exactly, everyone. Exactly. But it showcases in trading.
You know, in trading, the good thing about our failure is in trading there is no willful blindness.
Yeah, exactly.
Your failure is in black and white.
Black and white. It shows.
If you lost money, you lost. Akuna
Painting.
middle ground. No. But for other professions, you can have like a filter, which is
You hide around that.
you hide
something.
around that filter. You know, I failed, but so
Exactly.
you hide around it. In trading, there's
Also, Dalio says, like, he gives an example. If you follow his Instagram, which you guys can go and follow, Ray Dalio, he gives wisdom insights every day.
Breaks down the principles, I think,
Yeah.
into
And sometimes some
smaller
videos.
principles.
So there was one I watched. He was talking about how in life people like to hide from the truth. For example, you're
denial.
in denial. Let's say you're sick. Maybe you have cancer or even AIDS.
HIV.
But he gave that example. But you don't want to go to the doctor for them to confirm that yes, you have it. Okay.
Yeah.
You rather hide in the not knowing than going and knowing the truth.
Yeah.
But he says you rather go and know and work on it, accept it.
true.
Then you might even
It's not that easy.
exactly.
Accepting losses is not easy. And that is one thing about trading. Accepting losses.
Hey, kusema ni rahisi kufanya.
Exactly.
Yes,
Even
yeah.
accepting is easier. You can tell someone, okay, let's get into this investment. We can lose 25%. Lakini hebu lose your 25%.
Zile simu watakupigia.
They don't accept.
And at the time of writing the contract, it was
it's
so
okay,
okay. It was so okay. You can lose 25%.
You lose the 25%.
But if you look into the ego and its defense mechanisms, one of the first defense mechanisms of the ego is denial.
Denial, yeah.
Number one.
Number
course,
one,
yeah.
like
Safeguard
how
your ego.
Exactly. How you're structured, the first thing to do, the first response your ego will do is to deny things. Even if it's the truth, you'll first deny before you come to accept. Once you understand that, it becomes even easier to accept things because you'll deny before you accept.
Exactly.
Before that,
And that is what he says. Like, know the reality and deal with it.
exactly.
Yani jua ukweli. Asa hiyo ingine pambana nayo. Deal with the truth. No, exactly. Ukihide under not what is real, you basically like you are cheating yourself, you see. Exactly. And that is comforting to people. You literally know you're lying to yourself, but you're comfortable.
Self-denial.
Yeah, that self-denial gives people comfort. Like, it's easier for you to deny something that you know is either right or wrong than accept it.
Yep.
And you will feel comfortable denying it
Than accepting.
than accepting it. Exactly. Apart from, I was talking about failing well.
Yeah.
There's also this one principle he talks deeply about on the culture of Bridgewater, as you asked, Ken. The idea meritocracy part of it.
Yep.
So I think we can go deep into idea meritocracy. Like, what does it say? What does he say about it? How do you implement it?
Yeah.
How do you maybe create it in your own? Because I think we've really tried to also put it in our company, the culture of maybe basically idea meritocracy means we are open to all ideas, but the best idea wins.
It's
Exactly.
not who has the idea.
Exactly.
It's the idea.
There's no hierarchy.
There's no
because
hierarchy.
Ken is
Exactly.
the boss.
Exactly.
His things go.
You can be the CEO, but your idea is not the best.
Yep.
The janitor has the best idea.
And you have to go with the janitor's idea.
Exactly. So that is idea meritocracy.
And that's one when it comes to ideas. I think the second one that I'd put in, which is very, very powerful, is, and that's one thing that I think also many people have not learned, is criticizing power.
Exactly.
Okay. So at Bridgewater, if we're in a meeting, everyone has something called a dot plot. Is it called a dot plot or something?
Yeah, dot plot, yeah.
Dot plot of collector. I don't remember. But what basically that means is every time the meeting is going on, you're given a chance to rate how people, for example, are prepared for the meeting, how people are handling the meeting, how people are contributing to the meeting. So for example, if we come to a meeting and I think Caleb did not prepare for this meeting, is not engaged, and he's not doing the right thing, then despite him being, let's say, at the top of the organization, I'm right there saying, Caleb, you came into this meeting not well prepared. You didn't conduct yourself in the best way possible, and part of the reason why things didn't flow as well as they should is because you didn't do this and this and this.
And this is how it's affecting the company.
Exactly. In most companies, the intern ananga hata kitu ya kuambia boss. Kwanza Kenya yetu. Kenya, ngumu hiyo vitu. Yani kupasiwa along. So you can imagine now, like us, we're structuring our organization to have such a culture whereby anyone's ideas, whether you came in today or 3 weeks ago or 3 months ago, whether you've been with us
or you started
even or us who we started, still someone can come in and criticize me, and it gives a very, very good explanation of something called thoughtful disagreement.
Thoughtful disagreements.
Exactly. So thoughtful disagreement, if you think about those two statements, what basically it means is at some point we'll disagree, but please, can it be in a thoughtful manner? Can all of us put our ego aside and focus on finding the truth?
Exactly.
If we can both do that, then we can have a thoughtful disagreement.
And those are the 3 things he says. To have an idea meritocracy, 3 things. Put your honest thoughts on the table, have thoughtful disagreement, abide by agreed upon ways of getting past
the disagreement. Exactly.
Yeah.
So again, there's also some things which I think also people need to understand for meritocracy. Meritocracy comes from the idea of merit. Again, still, if you're a new trader and you're starting to trade, let's say, and you have an idea on how the portfolio maybe should be structured, we will listen to you and you'll give us reasons. But let's say if Lawi is the risk manager and has over 15 years of trading experience and risk management of the portfolio, if he differs with you when your idea is just coming out, then you should be willing enough to listen to him because he has more merit. He has spent more time doing it, so he has more qualification to teach you. And one of the principles again he has is realize whether this is a conversation between peer to peer or student to peer.
Yeah, exactly. Yeah, he
realize whether.
And he says, if you are the student,
be humble
enough to learn from the other person.
Exactly.
And mse mwingine, if you're the teacher, don't feel like you're
the god.
Be also humble yourself to treat this other person the right thing.
Exactly. So he has that principle where you have to realize when you're having this conversation, because he says there are three kinds of conversations. There is above to below, there is below to above, and then there is across.
Peer to peer. Yeah.
Exactly. So like us, when we talk, this is peer-to-peer conversation. Because I don't assume I know as much than Caleb or as Lawi, because we've been going through the same thing, the same age, same experiences. So this is a peer-to-peer conversation. But you could have someone who's been trading, let's say, for 20 years, like Michael, let's say. And if you're talking to him, even if and I think some of those things also come from human nature. In that, when you're talking to Michael, our nature basically is for us also to tame ourselves and listen.
Exactly.
Also, you'll want to listen. Because I've also met people who've started trading a year or two ago, and when they come to me, they listen. They don't come in with the idea, I know everything. They come in and they say, okay, I've seen some of the things you're doing and I'm willing to listen. But also now you need to realize that as much as, let's say I've done this for long, there are some ideas which you can have and I need to be able to listen to them. So you need to be humble enough for you to at least accept some of these things that are being thrown to you by the people who are below you. So I think that is one of the most important principles for Bridgewater. But I think for me, the personal lesson that I'd say I picked up from him is one of the most important things he has is realize that the ideas in your head could be wrong.
Very wrong. Utterly wrong.
Yeah.
Wrong.
Realize that. Just have that fear. He calls it a healthy fear. Realize that the ideas you have in your head, maybe the ways of doing things that you think things should go could be wrong. And be humble enough to allow other people to criticize you and to show you other better ways.
Yeah, he says that's the greatest tragedy you can have in life.
Exactly.
Having the wrong ideas in your head and you're living with them.
Pepperstone is an award-winning online global forex and CFD broker. It offers unparalleled service, exceptional pricing, and quick execution speed.
So I think the basic point is be open-minded enough to reason with other people on a level of thoughtfulness and also on a level of trying to understand. Because also I've noticed you can reason with someone, and this is also something that is in the book, I think. Is this book by Stephen Covey. It's called The 7 Habits of Highly Effective People. And he says one of them is listen with an intent to understand rather than with an intent to respond. I think if you listen with an intent to understand, that's very, very different from listening with an intent. Umaliza sasa pia mimi nikushow.
You're done.
Hata uko unasikiza, umaliza. Acha sasa pia mimi niongee. So and you'll find yourself listening from both viewpoints. There are times where personally I've caught myself listening with an intent to understand and listening just for the sake of listening. Like, I know what you're saying. I'm not even there. Najua too, I'm lost in my own ideas. And if you listen from those two viewpoints, you'll discover that it's very, very different. If you listen with an intent to understand versus with an intent to respond, there's a very, very fine difference between
and not like approaching life that way. Always listen to the other person.
Yeah.
Understand where he's coming from, because even if he's wrong and you give time to understand them, you'll know how to correct them. But
Yeah.
if you're just arguing, Azi, you don't know, let me tell you.
Uh-huh.
Understand, and okay, this is what this person means. Then you'll understand, okay, this way is going wrong. Okay, this way I can correct him.
Exactly.
And if you do like that, he'll, okay, makes sense.
And what is one of the ways to also practice that? So how do you practice that?
I don't know.
Listening.
Yeah.
Uh,
One of the best ways to practice what you've just said,
Yeah.
which is listening with an intent to understand, is to make sure after I am done speaking, please tell me what you've understood from what I was
from
saying.
what you're saying. Oh,
Okay.
yeah.
Okay.
Yeah, that's
so
true.
if I was speaking, and then you can now say, okay, Ken. So before I even respond to you, so
Is
Ken,
this what you mean?
is this what you mean?
yeah.
Often you'll find that
You got it wrong.
you got it wrong completely. Completely. You get? So that was something devised by a psychologist called Carl Rogers or something. Yeah. He's talking about such ideas. So you should really try and have now such filters where you know, okay, maybe nilikupata wrong mahali. So, okay, correct it a bit. Then now you can respond.
Yeah.
Yeah. But these are not hard things.
Yeah.
These are things you have to really, really be conscious to teach yourself. Because for the last 20 or 25 years of your life, umekuwa ukiishi on the other, hata hujakuwa conscious of such things. Umekuwa tu ukiishingi maisha yako. You're unconscious templates. So you're learning some of these things right now. Now you can imagine trying to teach this to a 50-year-old who's never done them. Or a 60-year-old.
An older person can't listen to you.
Kwanza huyo hakusikizi. Ati wewe kwani umeishi miaka ngapi wewe?
And that's why I'm normally humbled when you get students who are way older than us. Like this person is in their 40s, but he's come to listen to a 25-year-old.
Exactly.
That's a good trait to understand. This person is very open-minded. He's listening to young people. Hey, that's hard
That
to
was the
come by.
principle. He says be radically open-minded.
Open-minded.
Yes.
Yeah.
Exactly.
Yeah.
Hii ni principle. Yani ukikuwa umejifungia vitu, yani you are so
Exactly.
closed-minded, you think you know. I don't want to know what Ken knows. Life haita be open-minded. Yani,
Yeah.
it can be age, it can be maybe career-wise, maybe you have an MBA. Me, I don't have a degree.
It means wewe una idea yote
We're gonna masters. I won't listen to you.
Exactly. So be open-minded. Ule msana nadhani hata ajui vitu, no bado mara ajua vitu mingi
Mingi
kukushinda.
kulinda.
Exactly.
So
Because I can share a few principles.
yeah.
I'll share about 4.
Before you move on.
Yeah.
Yes,
It's
it.
fine. It's fine. Yeah.
But just as the book starts, this is the opening statement. Ray Dalio says, this is the introduction part of the book. And he says, before I begin telling you what I think I know, what I think, I want to establish that I am dumb shit. That is
I'm a
humility.
dumb
Yani,
shit.
exactly. Mimi sijui bado. Yani, I'm trying to
humble
teach.
enough.
Yani, mimi sijui. I'm dumb shit. Who doesn't know much relative to what I should?
No.
No. Yani, exactly. You should know much, but sasa saizi haujui that much. So you're open to learning. And that is what I think through the book he now goes and says, be radically open-minded. Whatever success I've had in life has had more to do with me knowing how to deal with my not knowing than anything I know.
Yeah.
Exactly. So in life, even as you talk to the other person, fikirianga mimi ni kama sijui stuff msa anasema.
Exactly.
Just listen, okay, understand, then you
Then
can respond. Exactly. You can go on, Caleb, with this was
Okay.
I'm dumb shit was the point.
Yeah. So a few things he talks about, because I wrote a summary of the book. I haven't finished, but it's a big book and really interesting. And I don't want to, like we said, take one author who's really well versed in what he's saying, then go deep. Yeah. Especially, I know Ken likes the likes of Kina Jordan Peterson. Go
Yeah.
deep in him.
Yeah.
Because Sam Harris.
Yeah.
Go deep in him. These are people who are really speaking. They're modern day philosophers.
Yeah.
But anyway, so back to here. So one thing he really says, and something we've also tried to practice in our company, an organization is a machine that consists of two things: great culture and great people. And if you go further behind, we like connecting. Like Steve Jobs says, you can only connect the dots looking back, not looking forward. Now these things keep connecting dots. If you go further behind, we read the book Good to Great, and James Collins talks about how good is the enemy of great. You should always pursue to look for the great people, great culture, great things. Not just good. Good is not enough. Good is not good enough. So good deep. And one thing he says about it's not like having a company. You're putting people in a bus. If you see these people shouldn't be in this bus, or maybe they want to go a different direction, be very open-minded, or what can I say? I don't know what's the word to say, to confront this person. Tell them the truth, like, because you're wasting this person's time.
Yeah, true.
Don't waste his time. Just tell the person, be honest. And Sam Harris has this book called Lying. He says, lying is one of the greatest things that just makes us not progress as a species. If you're honest with one another, I'll help you ras mapema. Hey, you're doing the wrong thing. This suits you, go do it, you know. And at the end of the day, it's also opinions. Don't really take at 100%. Also go and really think about it. But one thing he says, a great company insists of a great culture and great people. So a clear organization has both great people, great people. Now he further says, each influences the other, the culture and the people. Because the people who make up the organization determine the kind of culture it has, the culture of the organization determines the kind of people who fit in it.
Yeah. True.
You get?
Like it attracts what is.
So as the people will create the culture, then the culture will attract people who can fit into
the culture,
into that culture. And one now,
the people precede the culture, but the culture overwhelms the people.
Yeah. Then it just goes back and forth.
Because you can't start with culture first. You start with people.
Yeah.
And the
Like
people
we start the three of us.
That's why
Create a culture.
Yeah.
Other people will now join into the culture.
Exactly. And that's why now investors invest in the people.
Yeah.
The company is the company. But without the people, the founders, who are the founders, what's your story, where are you coming from, how are you guys working together, you know, that's what. So a clear organization has both great people and great culture. Great people have both great character and great capabilities. Okay. Then number 3, great culture brings, with what you're saying, the 5-step process, but now this is under the culture itself. Great culture brings problems and disagreements to the surface and solve them well. And they love imagining and building great things that haven't been built before. So the 5-step process, what Taras was saying, whenever you're progressing in life, it's never a straight trajectory.
Even markets don't move in a straight line.
Exactly. Nothing moves in a straight line. And there's this meme or video I saw online.
Pull back.
There's this scientific experiment. I don't know if you guys have seen that video. I don't know how I'll get it. There's a ball. There's a line. There's a thing. They put the ball on 2 different things. One has a line. It's just straight. Then this other one, it's like a roller coaster in NDV. Then he puts those balls together. And then the goal of this thing is for the balls to go and back. So on the straight one, you can see it's going, coming. But this other one, the one that's EV, it's even going faster than the other one. It's going it's going faster than the one that's just going straight. So basically you're saying life is not a straight line. And down to the bumps, you're going even farther and faster. You might think you're moving behind, but when you hit the bump, then you learn from it.
Now when
yes, it gets momentum.
Momentum, exactly.
Going to say
hiyo mteremko inakuja na speed, then you get
you get it. So I saw it online. It was an interesting one and I really liked it. But life is not a straight line. So the 5-step process, he normally says, 1, because you're normally going to go into a trajectory, and in life, and we keep saying this, and some people normally think that you are negative or what. No matter how good your life is at the moment, itakuwa mbaya one or another along
at
the
a
way.
point. True.
It's like Ken was saying up earlier,
exactly.
Struggle well.
Because in life we have many struggles.
Many
can be financial. Financial, yes, you have money. Say financial. Can be family. You see, your kid is maybe the most notorious kid. He's in prison. You see, family because you have money, but your kid is in cases. Drugs. Can be your wife, drugs. Shida ni mingi. Shida si about money peke. So
exactly.
In life, there's something that will always bring you down. Doesn't have to be money, but maybe your mental health can be down.
Your normal just health.
Your health can be down. Yeah, you can be the richest man, but you.
What if you want the second-hand president?
Exactly. So problems are there. Problems are always there. So you have to know how to deal with them. Continue, Caleb.
Yeah. So. Good point, Taras. Now, if you bring the 5-step process of when you're going through that journey, have clear goals so you know what you're
first point
for.
Is your goal.
Yes. So you know what you're going for. Okay, I want, in trading, my 1-year goal is to make 10% every quarter.
Like now I can say my goal is to be the 3rd money manager in Kenya.
Yes. Okay. Now that's a clear goal. You have a clear goal. Then, along the way, you'll encounter a hiccup. So, while you encounter that hiccup, identify the problem preventing the goal from being achieved. Identify it, because you might hit a wall and you don't know, nimegonga nini. Identify the problem.
And the root cause.
Then, diagnose what part of the machine or this problem that is not working well. diagnose it. Okay.
Kwanza amesema machine nikakumbuka how he says everything is a machine.
That's how his mind works. Na machine hapa amesema, now if because I wanted people to relate, but how he says it, diagnose what parts of the machine. Now the machine is the people and the designs that are not working well. Okay?
Yeah.
Then design the changes. Okay.
So goal,
well. So goal,
problem,
identify the problem, diagnose the problem, then change the machine.
Okay, after diagnose umejua.
Change kama mtu asienda na interfere na stuff to mtu put an down. If the machine, you get my point. And then now doing what is needed. You've changed these people. Now number 5 is doing what is needed. You've changed the people.
I think it says evolve, sindio?
Yes. Now execute.
Yeah, execute.
Now do what needs to be done. So may change. Yeah. So in him now he shows how life trajectory goes in a loop. Okay. And if I find
there's even that picture.
So you can just attach it to them. We'll have a better loop that you can attach to them. I think
okay.
I have a perfect sample on TED Talk.
Nice. Yeah. So it's a loop. So goals, now how it looks here. 5-step problem. Goals, problems, diagnose, design, doing. Goals. So it's always like that. So it's a loop. Okay. So this is a culture he has. Whenever the company is moving forward and there's a problem that has come up, some can be predictable, some you can't really, they just come up, like in the markets, black swans. You can't, you didn't know 9/11, COVID. Okay. The goal has been interfered, let's diagnose that. So that was also a good culture that we learned from it. And then another thing he says also, tough love is effective for achieving great work and great relationships. And tough love is the one that has what you're saying. Criticize the other person openly and have those thoughtful disagreements and abide by ways of moving forward. And it's tough love.
Why do people hate that thing by the
ego?
It's ego too. Pain ni kitu muhimu sana kwa. Lakini pain though. But you know, I was reading the works of Sigmund Freud.
Yeah.
And he was saying our personality comprises of 3 basic breakdowns. So we have
what
our personality
okay.
can be broken down into 3 basic components. So we have one, the id. So the id, according to him, is the primitive instincts you have as a human being. Yani, your need for sex, your need for food, your need for validation,
drugs,
your need for entertainment. All those things are primitive. Yani, they're primitive behaviors. Like imagine telling a young kid mwenye hajui kuongea, cheki usilie juu uko njaa, ngoja utakula after 1 hour. Haezi atalia tu mpaka apate food. Ndio. But now as you grow older, you now develop the ego. Okay? So the ego is now how you learn to interact with society, people, how to behave, and those things. So you now become aware kidogo. So the ego now is what tells you, check uko njaa, lakini huwezi kula katikati ya meeting, wewe tulia.
Exactly.
Kula after meeting imeisha. But then you have the super ego. So the super ego is the moral and the moral side of you as a human being. And what you've been taught is right and wrong in society. Okay, it's like your conscience. It talks to you when you're about to do the wrong thing. Check live tunaenda kudu. That is that voice which comes, true. But you can really tame it. You know, you can do evil mpaka hiyo voice ilikufa. Iliisha sasa ikwangi tena. But now everyone has that voice. So a perfect human being, or a human being who's aware, learns to regulate between the 3 impulses. It's very, very important for you to satisfy these id things, because also if you repress them, they come back biting you in other ways. But then it's also important for you to strive to do good, but don't do good too good until it becomes a problem. You know, there's this quote that I like: every virtue when pushed to the extreme becomes a vice.
Yeah.
If you become too kind, pain akuwa vice. I quit in a virtue. If you become,
and that's what my brother King Solomon says, do not be too righteous.
Exactly.
And do not be too wicked.
Exactly. Be in the middle.
Huwezi kuwa perfect.
You should be in the middle, by the way. You shouldn't even, because you can imagine people unasema trying to push to the extremes. You can't live without sins and certain things. They'll just come about. They'll bite you at some point. So now a perfect human being is one who's integrated the 3 of these things. Now if you integrate them, let's say, like for us now, what you've learned is your ego, how it works. The reason you're feeling so much pain when someone criticizes you is because of this id It's because of this id part of your personality. There's this primitive part of your personality that thinks when someone criticizes you, they don't like you. They're saying you won't succeed.
It's against you. He's not rooting for you.
He's not rooting for you. There's this primitive part of yours that any mtu sasa ni adui tena. And it's just criticism. Now if you understand that, it becomes easier for you to take it in, because this pain is a clear reflection of yes, there's this pain that comes from this part of my personality, but knowing well that this is good criticism, you can reflect on this pain and come up with a better principle moving forward. And now you won't view criticism as an attack. Instead, msaki ku criticize, instead of being ready to fight, you'll be more thoughtful and you'll take it in more positively. So that made a lot of sense now to why people are in denial now, attacking your criticism mingi.
Yep. So if I finish like I said, tough love is effective for achieving both great work and great relationships. Then there's a quote he says, which I think it's important before I move to the next one. Numerous studies have shown that there is little to no correlation between one's happiness and the amount of money one accumulates. Yet, there's a strong correlation between one's happiness and the quantity of one's relationship.
So it's more about the relationship than more about money. What is the
yes.
point there?
Yeah.
It's more about
like the quality of relationship. It has a correlation with happiness. It can increase.
Quality of relationships.
Like if me and you, we're in good relationship, my happiness than having money.
Okay.
Yes.
Okay.
Yeah.
Okay.
So on that tough love, achieving both great work and relationship. And ukunkimaliza now 3 more, he says trust in another culture, trust in radical truth and radical transparency.
Yeah.
Okay. So realize that you have nothing to fear from knowing the truth. Have integrity and demand it from others, etc. So those are also some cultures. Then another one very important, cultivate meaningful work
and meaningful relationships.
Exactly. So relationships have to be genuine and not forced. So later nature takes its course. So okay, I want to be his friend. Let me force this relationship. Benito upon my camera. Hey, this guy is cool, Ben. Let me be his friend. Those I've experienced those things. You know, the people you're saying maybe online or somewhere, then you're saying, hey, I want to be this person's friend. Those things they might work, but they rarely work because you came with you had a goal in mind, and if that goal is not achieved in a very easy
and Seneca talks about that also.
Yes, I think that's what has come to mind.
Those people who want to be friends because of benefit, because once the benefit is removed, they're no longer your friends.
They're no longer your friends. So cultivate meaningful work and meaningful relationships and let it nurture naturally. Okay, and then last over here says also create a culture in which it is okay to make mistakes and unacceptable not to learn from them. So basically says create a culture where if people make mistakes, it's okay. It's normal. It's part of life. See mistake. You're a waiter. Amevunja glass umfute. It's normal. It's make mistakes. But
you unafaa waambie waindi wa Kenya. Mnasikia nyinyi wase. Padre. Mnafanyanga watu vibaya sana by the way.
Mistake kidogo tu ashafutwa.
Ashafutwa. Weka mouse kuja kesho.
Yeah, so it is okay to make mistakes, but also understand it is unacceptable not to learn from them.
Yeah, repeating mistakes now.
No, you just unavunjanga tu glass. Hey, hata wemfute sasa, like you're doing the same mistake over and over again. So those, in a summary, I can finish with those few cultures which are under work principles that he had shared. So that's it from here.
So for me, I think on the personal principles, the ones that I can really emphasize, the ones that I think have had a big impact on me, let me just say them. I won't count them. I'll just say the ones that come to mind, top of mind, so that I won't force issues. The first one is pain plus reflections equal progress.
Yeah, I was going to tell you that. Please touch on that. Exactly.
Pain plus reflection will be equals to progress. And he gives you a perfect reason for that. The very many situations where you'll go through pain will not be the only situations which will go through pain. For example, if you're in a relationship and it ends, this may not be the last one to end. So reflect on it well. Understand these things well. Use the pain to reflect well, and then the next time you can make better decisions and you can make progress. That's the first one.
That's how you get the gem.
Yeah, that's how you get the gem, the principle now. Exactly. So you can say, okay, I'll never do this again, or if I do this under these circumstances, that's pain plus reflection.
It's the same way I was able to drop out. I failed the first time, and because the main problem, and I like sharing this, is because my mom was in the picture. My mom was really against it.
That was really painful.
She refused. That was in Form 2. I learned from it. I decided the next time I won't approach when my mom is there. So the next time I just approached my dad when my mom had traveled, and it worked. So, yeah.
So that is one. The second one I'd say is evolve or die. I think I like that one. And I really thought hard about it. Why evolve or die? Basically, it's this. Your life has to change for you to make progress. You have to change how you look at things. For example, 5 years ago, I had not read as many books as I've read right now, right? So over the last 5 years, I've accumulated some knowledge on how things work. Now, if I'm going to evolve, I must change how I look at things, how I relate with people, let's say like Caleb was saying, how you do certain things, and that will make you again evolve to a different person. Then you learn some more things, and then you'll evolve to a different person. Then you learn some more things, and you evolve to a different person. Let's say you start out in trading. You started out learning all the indicators. Then you learned one that was working. You evolved to a different kind of trader. You started trading on the 15-minute, 1 hour, then you evolved again. So you keep on evolving. You'll keep on evolving. And if you don't do that, basically understand that what is happening is the world is moving against you. So as much as you may think, I'm not making progress, no, you're making progress backwards. You're dying slowly but surely because the world is moving slowly against you because the world is always changing. You are 20, now you're 30, you have kids maybe. The world has changed as much as you may not realize. So if you have not changed, then you're slowly but surely dying. You're just dying. You're not evolving. Exactly. So that is another one that really fascinated me.
And I think that is, just as I interrupt you, I think that is really, really open in life. Like, life itself is evolving.
Exactly.
Ulianza ukiwa mdogo. The things you used to do when you were 5, you didn't do when you were 15.
Exactly.
The things you did when you were 15, you're not doing now when you're 25.
And I'll not do the same things I'm doing now at
when
35.
you're 35. Exactly. At 35, maybe you'll have a kid.
Exactly.
Right now, maybe every Friday you're going out.
Exactly. At
35, every Friday, maybe you're going to your kid, to your wife. So life itself evolves. So if you don't evolve,
die.
Exactly. Yes.
Exactly. So don't evolve that. I think you've done a perfect job of explaining that one.
And that's why, just one point, I normally, from my point of view, I believe life favors the people who are helping it progress.
The people who are helping it evolve in the best way.
Look at people who are dying sometimes. Drunkards, drug addicts. You know, ausaidi dunia. Hata dunia kwambia.
You look at listening today to some guy who's 89 and you're saying, you know, if you think about, let's say, like smoking cigarettes. If you're smoking cigarettes just consistently, then you're just basically cutting short your life. Every single pack you smoke, you're slowly but surely reducing your lifespan. Your lifespan. So even when unasema ni kama tu, even habits which lead you to now die instead of evolve are not the good habits, they're the bad habits. The things which you do which are not leading you to progress are the ones which are slowly but surely making the world move against you.
True.
Yep. So the third one I'd say is weigh the first order, second order, and third order consequences of doing things. That's a very powerful one. A very, very powerful one. In that, the first order consequence of drinking is having a lot of fun. The second order consequence of drinking could be maybe you're creating an environment for cancer to develop in your body. Maybe. That's the second order consequence. It's not the first one. And the third one is you could develop cancer and die.
True.
Okay?
You have to weigh all this.
You have to weigh all that as you make a decision. The first order consequence, you have a trade that is ahead of you. You want to take 10% risk. The first order consequence is you'll take the trade, maybe you'll be in. Okay? But the second order consequence, maybe you'll have fear. You won't be able to manage the trade in the right way. The third order consequence is maybe even that trade won't work the way you expect, so you'll end up losing 10% of your account. You get? First order consequence, you want to have a good body. First order consequence is you have to go to the gym. But if you go to the gym, the first order consequence of going to the gym is pain. But the second order consequence after pain is having the body you want. And the funny thing with life is the first order and the second order consequences are always inversely correlated. In that, any time where the first order consequence is pain, the second order consequence is pleasure. But anywhere where the first order consequence is pleasure, the second order consequence is pain. That's the paradox of life. If you think about it from that perspective, you'll really save yourself a lot of mistakes when you're making decisions. So that's a very powerful way to make decisions. Just think of the first order, second order, and third order consequence. I think those three are the ones that I'd pass along to you guys. I have many more, but I think those three are the most important that I'd pass along to you guys.
Okay. I think as we finalize, because for the interest of time, we have other errands to run. So for the interest of time, maybe we can just talk a little bit into his trading.
Yeah.
So maybe how he trades, how he looks at markets, his beliefs about markets.
Yeah.
Basically, I think we can start there.
Yep.
So for me, basically, I think I can give 1 point, then you guys can give one point, then we close it up. For me, it's the main interest about how he learned markets from Ray Dalio was one, he really looks at system development.
Yeah.
So before he even trade, and I think that is what he hadn't developed when he even lost money the first time. He hadn't really developed, because that is when now, after losing that money, he went to learn looking at history.
Yeah.
Because hey, mbona niko wrong hivi? Then when he went to look at history, he realized, okay, these videos have been happening. I just didn't look at history. See, so for me, I think what I really picked from him is, as you try to become a trader, the first thing, the most important thing for you to do is, first of all, develop a system. Not a theory, not a story, not a book you read, a system.
A way of looking
exactly.
at things.
It starts with first of all, your philosophy about markets. 2, have you gathered data around that philosophy that you have? Thirdly, are you executing it to precision? You know, you can have a system will develop, but you don't execute ile design.
Execution yako na tofauti.
Exactly.
The system.
So, first of all is learn how markets, like have a philosophy of how markets work. It can be through your own research, through historical market research also. Then develop a system around that through data. See stories. If you look at Ray Dalio, I think he develops much of his data, much of his system through actually computers. I think most of his systems are algo developed. Like algos runs through 500 years of data. I don't think a human can run through 500 years of data. It's very difficult, because even for me, I did it for almost 20 years. Actually, it was 17 years. It was long. And I only did about 3 pairs. You see, so gather data from history. So look at how markets worked historically. As Ken said, there's nothing new under the sun. All these events are cousins, brothers, sisters. They have almost the same bloodline. So if you look at how did this market evolve over the last 200 years, you can know how to trade it over the next
100 years.
100 years, exactly. First of all, for me, what I really picked from him is develop a system. Don't trade what you think, ideas, hype. Because guys, like if you see the last 2 years of trading, a lot of newbie traders have been trading based on hype, especially in the crypto markets. They have zero, hata wajui cryptos, they have zero research on it.
Walibuy too.
Elon Musk alisema. You see? The richest man said, we buy Dogecoin.
Tumebuy.
That is an idea you bought about it. So if you don't develop a system, there's literally, me I can tell you guys from
people follow the juice ameuza karibu so.
Yeah, he sold about 90% of what he owned on Bitcoin. So and he didn't tell you guys, we are selling today, let's sell. He told you guys when to buy, but when to sell, he did it.
And you know Bill Gates said, these people who are following Elon Musk, they don't know them, they don't have that $1 billion to spare. Elon Musk akiluza $1 billion, maisha yake yanaendelea
exactly.
Kawaida.
Because I think he sold it at about 60% loss. Yeah, he sold it at a loss, exactly. So first of all, for me,
speculate.
That is what I can say about Ray Dalio. Like, trade systems. Don't trade ideas. Don't trade stories, hype, what is trending. Basically develop a system and trade the system. And I think that has really helped me also into my trading. I took a break about last year or 2020, took a break, really did deep back testing, focus on specific setups, and that is what I'm trading right now currently. So I think if you move with what is like you are jumping from system to system because first of all you've not developed the first one. So it's so easy. Hata sija backtest what I trade. I can jump to what Caleb does as long as it makes sense. Hii line ikitouch hapa
nauza. But you know one thing with that also that I think is also one reason why personally I also believe you can't make money in trading unless you have developed a philosophy and a system is you won't have the confidence to stick with the philosophy and the system
when things are bad. Exactly.
You won't have that confidence.
The moment you lose 3 trades,
utaanza tena
magnets hapana tena.
Acha sasa niingie huku tena kwa trend following. Nimeachana tena na contrarian trading.
Kondo trend inaisha. Ya tayari sinaanza kwa
Exactly. And the moment I join the trend, market starts to pull back.
It's like this market. Ukitesa nikaina kuangalia.
Yeah, like markets actually I always think like that. Like markets ziko na binoculars.
Nikadra quote. Kama kuna hizi patterns of trading. When I stopped trading them, now I can see them. I don't trade zina work. Let me go back. Hey.
Exactly.
So you need to have a system.
Yeah. So first of all, develop a system. Take time and
Big
data.
But I also think I have a reason for that.
Mm-hmm.
I think when you're looking at markets from a lens where you have your positions already taken and you have your views on how a system should work, you're attached to it. But when you're looking at it and you're not trading, even when you're just looking at the pattern and you're not trading, it's very easy for you even to wait for a perfect setup. But ile time una John tafuta hii setup fulani hii yangu, you're so attached to it that hata before you form vizuri unataka tena kuanza kuingia, umeanza kufanya vitu zako nini. So that is what basically now makes you interfere with even your system. Unapata umeanza kuchukua trades or you shouldn't. That's why it takes time for people also to learn, I think, how to trade.
Exactly. And I just finalize on my system part is as you formulate a system, there are I think core parts of a system. And from what I picked from him and what he did wrong, why he lost everything in 1982, 81, 82 was risk. So the risk in your system has to be well defined. You have to know what is your maximum portfolio dip. What is your maximum risk on a trade? What is your maximum exposure per week? What is your maximum exposure per month? And you need to follow these things religiously. Yani kama Mungu wako. Tulisema tukilose 4% mwezi ni hivyo. And I think that is one thing about also this man. After his first blowout, I think since he now started trading well, I think his last drawdown was about 5%. I think it was 202. Yeah, 5% annually, and that is after fees. So maybe he was even maybe up 1, then fees took him maybe to -4 or 5.
Okay, COVID used downward.
But he came back.
He came back. Yeah, he didn't lose. That COVID shock, he had to close a loss of about 15% on the stocks he was owning. Because actually markets dropped 38%. So if you're really holding stocks and you knew you had to cut it somewhere, that is one thing about risk. And that is something very, very good. Because most people, cut your risk. Wange hope, itarudi. This is stocks, in COVID. At least for him, he accepted. No. It was a no-brainer. We're down 15, cut it. No. So for me, one part of a system is really detail so much about risk. If you don't detail much about risk, there's a high risk that you will get the risk of ruin. And still, even after learning so many things, developing a system, if you don't develop that risk part of the system well, doom is coming. You see? Exactly. And that is, for me, what I really learned from him. So risk, that aspect of actually risk-adjusted return is what actually came from him. Things about reducing risk without reducing return, such stuff. It was a very, I think there's also a video about that. He talks about, I think it's maybe diversification. Maybe you guys will talk about it, but there's that also, reducing risk without reducing return. So develop a system through data. So gather data. If you're trading a system, maybe 10, 20 years, 50 years, 100 years, depending on how much you want to go back into history. Then follow that system and trade it religiously. So don't waste time, almost a year developing a system and you can't execute it well. So for me, it's that point. Develop a system and try to execute it with perfection. I think that is one point from trading about Ray Dalio, because we really didn't have systems back in 2017, 18. We really, actually, I think COVID COVID time is when we really spent much time into back testing and all that. So basically testing what you're trying to do. And if you look at him, he's done now the new book Changing World Order. He's done 500 years of market research. That is so much data. Anyway, 20 na niko confident nayo na trade size. Jamaa na ako na 160 billion anatumia 500 years of data. So he knows, okay, at this time it's not good to invest in the US economy, let's invest in China. This time let's invest here. Data, my friend, trade data. Don't trade what you think. I don't trade markets, I trade data. Exactly. Another point about markets that you picked from principles or from Ray Dalio.
You go, Mel, summarize.
For me, I'd say diversification.
Very important.
Like Clay was saying, according to Ray Dalio, diversification is the holy grail of investing. In that, and he explains it in a very, very good way. For example, let me just give you a hypothetical example. If you have $100,000 today and you want to allocate it to assets, how most people would think is they'd say, okay, let me put in 30% in stocks, 30% in bonds, and then another 30% in something else. Now, what that would do in markets generally is it would affect markets. Why? Not it will affect markets, but you will not have reduced your risk. Why? Because stocks are generally riskier than bonds, and bonds are less risky than stocks. Okay, so the right way for you to diversify, first of all, is to look at asset classes as the risk components. In that, bonds are generally less riskier than stocks. Stocks are generally less riskier than cryptos, and cryptos, let's say, are generally less riskier than venture capital. Okay, so if you're going to allocate money into these 4 ventures, you're going to allocate capital. What do? You start by, first of all, putting 60% of your money into bonds. It's the less risky thing, so you put majority of your cash there. Then you can put, let's say, 5% into venture capital. You can put again 10% into cryptos, and then you can put 25% into stocks. That way, you have increased your chances of making a high return, and at the same time reduced your risk completely, because you're playing with very little money where it's risky, and you're playing with a lot of money where it's safe. So you've balanced out your return, and I think it's very, very important to understand. But again, risk revolves around assets in different economic environments. So you need also to spend some time studying different economic environments and how to position yourself. But I think that's not for today. For you to learn that's a whole process again you need to start. So it's quite different. But I think for me, that's one thing I'd say. Try as much as possible to diversify your risk, and especially as you get older. For now, you're young. For us, we are young. We can take risks, wild risks, in fact. But I think once you start getting to the age of 35, 40, once you start having kids and you're thinking, and how he got into this idea, by the way, just going back a bit kidogo, it was sometime early 2000, he was diagnosed with cancer. So he knew he had maybe some short time to live. So what he was thinking was, how can he structure his fund such that the kids of his kids will benefit from that money, and they'll benefit from that money since it's performing well in all economic environments. So he created something called the all-weather portfolio, all-weather fund, which is basically something that is designed to perform well under all economic environments and make money under all economic environments. So that's something you should think about, and think about heavily, deeply, and try to think of how you can structure something of the sort. But with that said, I think I'll stop there. Caleb will summarize.
Yeah, I think what I can just say is work with the in terms of systems and all, work with the team and look at different strategies. Mm-hmm. I think that's how he comes up with those different weather funds and all.
Yeah.
We've seen different companies where people are just working with one system and one, which is not, we don't believe in that.
Yeah.
Basically have a team, believe in the team, and strategize with different strategies. There's a time my system might work well, Ken's and Taras are working badly. There's a time things can change. So be very open-minded to create such a system where everyone's system, you can take it through a process, not that let's just listen. Take it, incubation, then test it, then before it goes live into, and I think that's what people like SMB do. SMB, if you get a new idea, that's the process they have, SMB Capital. Take this process, we test it first, and then we evolve with it, we see how it's working, test it, back test it, and then now come and start trading it now with real money. Start with small amounts and then start going increasing. So I think that's what I'll summarize due to time. But that's basically it. So there you've had it. That's the works of Ray Dalio. We'll leave a few links below where you can go check it out. You can go do the psychometric test that he has at principles.com, I think. And yeah, so that's pretty much it. Thank you guys for tuning in to this episode. Allow us to end it there. We'll come into next week, and as we said, we have a lot of guests lined up, so you guys will be sure to see a few more guests coming into the podcast in the next few weeks. So that's it from us. Remember, you can visit us at Bridgewater Tower 17th floor to learn more about what we do, the classes we have, and how we train people to do what we do, which is trading in the forex and basically the financial markets. So that's it from us. Remember, as I always say, stay woke, stay financially literate. Peace.
Thank you very much for watching Financial Hub's content on YouTube. For more Forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.